Hello, this is Kern Campbell with Financial Analysts. In this week's commentary, I wanted to try out a new feature in the software package Snagit. I've been using Snagit to capture images on my computer for years, but I've never played with the video capture feature, which gives me the ability of recording both my computer screen and audio at the same time. With this said, I'm going to try it out today. If you'd like to see me put more of these videos together, please email me and let me know. As you know, I'm a big fan of technology, and I'm always looking for new tools and tricks to enhance what we're doing. In recent weeks, investors have been asking about the economy and the market regarding what we see and how we look for warning signs in the market. While I'll not put you to sleep today by showing you all the details, I thought you may find it helpful to go through a few of the slides that are part of my daily review process. You see, each morning when I arrive at the office, I have a ritual of reviewing multiple data points to help determine if the market trends or economic conditions are changing direction. If they are, it allows me to do further digging into the data to determine what, if any, actions are warranted. With this, let's go to some of the... Our first slide is what we call our line in the sand sell signal. It measures a long-term moving average of the S&P 500 index, and once the price action crosses below the red moving average line, we take that as a signal that the long-term market trend is changing. As you can see, over the past 20 years, there have been three signals. Two marked major turning points in the market, and another did not, although it was greatly feared that the Euro crisis of 2011 would push us back into a world recession. The takeaway from this chart is that the current bull market is still intact. The second slide highlights the yield curve on 2-year bonds. In the past, when the black line on the chart drops into the red warning zone, it has occurred near the top of the market. Currently, the indicator is well above the warning zone, but if or when it drops back into the warning zone, we will take that as a signal to become more defensive. Chart 3 begins our look into the economy. This chart looks at the trend in unemployment claims. This is more of a lagging indicator and one that helps confirm what we are seeing in other charts. The main goal here is to identify the trend, and right now the trend is lower, and that's a positive for the economy. Chart 4 takes a look at industrial production. You can see where over the past few months the trend has been weakening. But it's still above the 12-month moving average. In this indicator, a cross over the moving average is not a tradable event, but one that will cause us to dig deeper into the data to determine if any actions are required within our portfolios. If other indicators are signaling warning signs, this indicator acts more as a confirmation tool of those other signals that were. Chart 5 is another economic indicator looking at non-farm payroll. As you can see, this is yet another indicator that is trending in the right direction for the economy. Chart 6 is the last economic indicator we will highlight. This chart tracks the Case-Shiller National Home Price Index. Housing and construction are a meaningful component of the U.S. economy, and we like to see this trend marching higher over time. We saw a little weakness last summer, but now the trend has renewed its positive trend to the upside. Chart 8 is the final slide I want to share with you today. This is one of the tools we call our Buy on the Dips indicator. We utilize tools like this to help us identify opportunities to buy into the market where we feel we have a higher probability of gains than just buying at random. This goes to the old saying of buy low, sell high. By using indicators like this and several of the other indicators we have developed, we feel it gives us an advantage when putting money to work in the market. This concludes our April 20th, 2015 market commentary video. Remember what we always say about the market. If and when the facts change, so shall we. With this being said, I'd like to thank you for tuning in to our very first video. We welcome your feedback as well as any suggestions for future topics you would like us to cover. Thanks again.